Hello everyone, welcome to another bullet revision video. We have already shared with you the revision videos of the first two chapters, or you can say parts of Companies Act, that is company formation and conversion and investment in loans, and this is probably the third video, that is the third bullet revision we are going to discuss today. Ye sirf revision videos hai, these are only revision videos, not meant for full concepts, I would say, because they take a lot of time. So for full conceptual clarity, you can check out a sale which is already live, and at heavily discounted prices you can get all my courses, including CMA Final Law, which is available in a mix of Hindi and English as well as complete English. Right, so let's start with the bullet revision of the third part C, dividends. What do you mean by dividends? See, a company whenever earns profit has two choices to make. It can either retain the profits or it can give away the profits to the ones who have invested in the company, right? That is its shareholders. Now, the provisions of dividend are covered in chapter 8. We have basically very few sections, section 123 to section 127, which deals with the provisions of dividend, and we have to look at all the provisions as to decide who has the power to give away the profits. Is it board or is it the members or the shareholders of the company? How much dividend can be given, and all these part, right? So the time limit, the duration, the amount, the power, and if the dividend is not given, what happens, and all those provisions. Okay, so one by one, let's quickly realize all this. First of all, when I talk about dividend, they are distributable profits. If we talk about a Section 8 company, it is prohibited to distribute dividends. So this is one such thing. Then we have, my dear, two types of dividend, equity dividend as well as preference dividend. When we talk about equity dividend, it is not fixed. The rate varies, and the preference dividend is at the fixed rate, right? Again, in preference dividend, we have cumulative preference shareholders and we have non-cumulative preference shareholders. So when we are talking about cumulative ones, if a dividend is not declared for preference shareholders in one particular year, it gets accumulated, and in the next year it will be paid, right? In non-cumulative, it doesn't get accumulated, and if it is not declared, it gets waived off, right? Now we have two types of dividends according to section 123, which is final dividend and interim dividend. What do you mean by final dividend? Final dividend which is declared at an annual general meeting only, and interim dividend which is declared between two annual general meetings. So quite possible the company does not want to wait till annual general meeting and wants to declare dividend because it knows that it has made heavy profits and want to maintain the position, dignity, or growth of the company, or whatever the case may be. So company wants to declare dividend before annual general meeting. It has the power to do so by using the provisions of interim dividend. Okay, interim dividend, my dear, the only difference between final dividend and interim dividend is that, apart from the meaning, interim dividend is declared by the board and final dividend is declared by the members or by the shareholders. Okay, so that is the main difference. Otherwise, all the provisions of interim dividend as well as final dividend, they apply. The provisions of dividend apply to both side of dividends. Interim dividend, there is you can say one more point which talks about the sources of interim dividend. We'll discuss it a little later. Now, declaration of dividend. If we talk about the final dividend, it is declared at an annual general meeting. First of all, it is proposed by the board and then it is declared by the members at an annual general meeting. The members have the power to reduce the rate of the dividend which is proposed by the board, but they cannot increase it. Dividend is a matter of ordinary business and it is declared by passing a simple ordinary resolution. A simple ordinary resolution. Okay. These are the sources of dividend. That means if you are giving away dividend, then obviously you need funds. Because if you have said that I'm going to give away dividend of 10%, the 10% of your capital comes out to be 1 lakh. The company obviously needs 1 lakh rupees to give this. So where will this 1 lakh rupees come from? For that, we have three sources. What are the three sources that you can provide from the profits of the current year? Current year means supposedly you are declaring dividend for financial year 21-22, then the profit of this particular year. You can also give away dividend from the profits of previous years which have not been transferred to reserves. That means you have the balance of P&L account lying in your balance sheet. From that, you can give away dividend. And you can also give away dividend out of the money which has been provided by government. Sometimes government has undertaken that if this company does not pay you dividend, I'm going to pay you dividend. If the government has undertaken some kind of guarantee, so government can also provide money, and out of that money you can pay away the dividend. If you want to give dividend from that reserves, that means you have earned profit in previous years and you have transferred that profit to reserves, and now you want to give away dividend from that particular reserves, then there are different provisions and different rules for the same. A company need not transfer anything to its reserves before it can declare the dividend, so that is completely optional, and it is something which is not mandatory, often asked in a kind of objective question, right? So if you want to give away dividend from reserves, you have to follow the rules, and only from free reserves, of course, that you can do. What are the rules for declaring dividend out of reserves? There are 4 conditions broadly which has to be followed. First of all, the rate of dividend shall not exceed last 3 years average. The total amount that you draw shall not exceed 1/10 of PUC plus free reserves according to latest audited financial statements. The balance shall not fall below 15%, and the 4th condition, that after you draw whatever amount you draw, that you have to utilize first to set off the losses, right? Then comes the whole hierarchy, how the dividend is going to be declared. See, whenever a company declares dividend, within 5 days it deposits the same in a separate bank account which is opened in a scheduled bank, and within 30 days of passing of the resolution, the dividend has to be paid off. It cannot be paid in kind, it has to be paid in cash only, and it will be paid to the registered shareholder only, or to his order or banker. When we talk about interim dividend, I have already told you, interim dividend is something which is declared between 2 annual general meetings. It can be during a financial year or after the financial year, also before annual general meeting, right? When we talk about the sources, they are the same sources. Out of surplus in P&L account, then profit of financial year for which dividend is declared, and profits generated till the preceding quarter. Supposedly, you are declaring interim dividend for financial year 2021, but you are declaring the same in August 21. That means that financial year has ended, and after that you are declaring interim dividend for the last financial year. So now whatever profits have been generated in 21-22 up to June, that can also be used for paying interim dividend for previous financial year. But if the company has incurred losses till the end of that quarter, then dividend is not going to be declared at a rate exceeding the average rate of past 3 years. Okay, clear? Okay, then we move forward. Dividends payable in cash to registered shareholder, and you can of course pay bonus shares in addition. That is not a problem. If you do not pay this dividend, or if the dividend is not distributed, see, dividend has to be paid within 30 days of declaration. If it is not so, then every director who knew this is going to be liable for imprisonment, fine, and the company is also going to be liable for simple interest at the rate of 18%. But there are certain exceptions to the same. Certain exceptions mean, in these cases, the company or the officer in default will not be liable. Why? Because the dividend could not be declared because of operation of any law. What do you mean by operation of any law? Supposedly there is a foreign company, and you have to pay dividend to foreign company, and the laws of FEMA do not permit you to do the same. Well, you will not be able to pay dividend. So in this case, it is not the fault of the company for non-payment. So in such case, company will not be held liable. If shareholder has given you clear instructions and you could not follow those instructions, if there is a dispute as to who has to receive the dividend, if the dividend was adjusted by the company, supposedly company has to take from shareholder 10 rupees and the company has to pay 2 rupees to the shareholder from dividend. So company paid only rupees 8. Company has lawfully adjusted the sum, so company cannot be held liable for non-payment. Okay, and for a simple reason that the non-payment was not due to default of the company. Okay, Clear? Once a dividend is declared, it cannot be revoked. It cannot be revoked unless there is a consent of the shareholders, and there is a valid reason. It creates a debt, of course. So now, unpaid and unclaimed dividend. What happens if the dividend remains unpaid? See, when you declare the dividend, within 5 days you transfer it to scheduled account, and within 30 days of passing resolution you pay the dividend. If it is paid, it's good. If it is not paid, then within 7 days again you transfer it to a special account, which is unpaid account, which is known as unpaid account, an account in a scheduled bank, right? If you do that, good. If you do not do that, then you are liable for a penal rate of interest 12% per annum. If it is transferred, then within 90 days you have to prepare a statement, that is, company has to prepare a statement that these are the last known addresses and the shareholders who are registered in our records, and we have to pay dividend to these people, and these people have not claimed the dividend, and hence it is transferred to unpaid account. So within 90 days you will prepare a statement and upload it on website of the company and the website which is meant for this particular purpose. So anyone who thinks is entitled person will apply to the company and get their dividend. If this remains unpaid for 7 consecutive years, then it is transferred to IEPF account. If it's paid, great. If it is not paid, then it is transferred to IEPF account. What is Investor Education and Protection Fund? Well, you have this fund which is maintained by the government, and there are certain sources of this fund. That is, government gives you donation. Why? Because this particular fund, as the name suggests, is meant for education and protection of the investor. So investor is educated and protected from the money available in this particular fund, which is a good cause, and hence government also supports the same, and government also gives you grants and donation, right? Then whatever money is there is invested, and you get some income from that investment also. Then you get money from here also, unpaid dividend account also. Likewise, maybe sometimes the company has issued debentures. When the time comes to redeem or repay debentures, there are some debenture holders who do not claim. Maybe I have taken debentures of some company, but when the time comes, my address has changed, my things have changed, and I have not updated it with the company. So company, how will the company find me? And I don't take any trouble to go to the company and take back my debentures. So that the money that company has does not belong to the company, and company had to repay to me, but I'm not available for repayment. So the company is going to transfer it to IEPF account, right? So in such cases, IEPF account gets money. Now IEPF account uses, or that fund uses, the money to refund to people who apply even after that. Supposedly I am eligible for certain dividend and I could not apply to the company, it gets transferred to IEPF. I can still go to that authority and I can provide my documents. I can give the proof that yes, I am the eligible investor who was entitled to dividend, but I could not get it. So the fund authority will provide me the same, right? Then the same amount is also used for investors' education and reimbursement of legal expenses and like things. Okay. If it remains unclaimed for 7 years, it is transferred. Then this also I have told you. Fine. And that's it. We come to the end of this chapter. See, if the dividend once declared cannot be revoked, this also I have told you, right? So we come to the end of this particular chapter of dividend. If you look at the questions, interim dividend, as I told you, it is declared by the board of directors. It is not declared by the shareholders in annual general meeting. That is the final dividend which is declared. Dividend can be paid by a company. A company pays a dividend undoubtedly, but what are the sources of the payment of dividend? It can be paid out of the profits of current year, out of the profits of previous year which have not been transferred to reserves, and out of the money provided by government. So all of the above. When we want to pay the dividend out of the reserves, then we have a rule which is rule 3. We have to comply with 4 conditions which are stated in rule 3, and once we comply with all 4 conditions, then only we can draw money from that reserves to pay the dividend. Unpaid dividend after 7 years is transferred to IEPF account. I think the answers, let's check the answers. It's A, D and B. A, D and A. How come it's A? A is profit and loss account. No. This is incorrect. Absolutely incorrect. Okay, in justification they have written it correctly, but this particular part they have written it incorrect. So you mark it. That's why I tell you that please check. Mistakes, errors, they can be found anywhere and everywhere. Now, write a short note on interim dividend. Dividend which is declared between two annual general meetings is called that interim dividend. And what can be the sources? Current financial year, right? Or you can say the quarter, preceding quarter also, that can also be. And in case there is a loss, then the rate cannot exceed average rate of 3 years. So all this you are going to specify. Who has the power to declare interim dividend? Board has the power to declare interim dividend, and it also has to be deposits. See, all the provisions, all other provisions like payment of dividend, dividend in cash only, and all these provisions apply to interim dividend as well as final dividend. Purpose, sources and applications of IEPF. Just as I discussed, these are the sources. Then it is of course established with a view to support the activities of education, awareness, protection, and there is a committee which takes decision how the money is going to be invested and what activities it must undertake. It also in fact prepares a report for the same. When we talk about application, these are the purposes of or you can say this are the cases of utilization of this fund. What is the procedure which has to be followed while transferring unpaid or unclaimed dividends? So as I told you, within 30 days you have to declare, you have to pay dividend. If it is not paid, then transfer to unpaid account within 7 days. Then you prepare a statement, 90 days, within that 90 days you upload it. If it remains unpaid for 7 years, it is transferred to IEPF. Okay. Then there are more details also. You can of course read these details. What can be the consequences if the declared dividend is not distributed? If it is not distributed, then you also have the consequences of section 127. You find a lot of errors. Okay. So you also have the section 127 which tells us the dividend has to be declared. If not, then there is going to be the liability provisions, there is going to be the penal rate of interest, plus there are certain exceptions in which company or the officer in default cannot be held, right? So that's it with the chapter or the topic of dividends. Thank you so much. Where is it? Thank you.